This week for Apple, the question isn't just about AI, but the execution of it. A highly anticipated update to Siri is reportedly delayed, adding to concerns that the company is lagging its tech peers. That news, coupled with new regulatory scrutiny, helped erase the stock's gains for the year in a single day. So how significant are these setbacks for Apple's big push into artificial intelligence? And did strong sales in China offer any silver lining? Welcome to TickerWatch News for Apple, Week 7, 2026. We're breaking down this week's news and developments for Apple, from Cupertino to Wall Street. Stock Snapshot. It was a tough week for Apple shares. The stock suffered its worst trading day since last April, slumping 5% on Thursday and erasing all of its gains for 2026. The sell-off pulled the stock into negative territory for the year. This happened in the context of a broader market retreat for technology companies. The Nasdaq index fell more than 2% on Thursday, and the so-called Magnificent Seven stocks are having a difficult start to the year. The wider narrative seems to be one of investor concern over massive spending on artificial intelligence and potential market disruption. For Apple, the combination of negative headlines and a weak tech sector proved to be a powerful headwind. Top news and headlines. The biggest story driving the stock down was a double dose of bad news. First, a Bloomberg report indicated that Apple's planned AI-powered upgrade for Siri is hitting snags in testing. This could push the release of some new features from the expected March timeline to later in the spring, or even September. The delay adds to persistent concerns about whether Apple's AI capabilities are keeping pace with rivals. Adding to the pressure, the U.S. Federal Trade Commission sent a warning letter to the company. The letter raised concerns about potential political bias in the Apple News service, questioning if the platform improperly favors some news outlets over others. This one-two punch of AI execution risk and fresh regulatory scrutiny prompted a 5% drop in the share price on Thursday. In more positive news, Apple continues to show remarkable strength in the critical China market. While overall smartphone sales in China fell 23% in January, Apple was the only major brand to post year-on-year growth, with sales climbing 8%. This performance was driven by sustained demand for the iPhone 17 series. A new cosmic orange color option is reportedly gone viral, being compared to the signature color of luxury brand Hermes, which seems to have reinforced the iPhone's status appeal. The base iPhone 17 model also now qualifies for some government subsidies in China, further boosting its appeal. This strong China data follows a record-breaking holiday quarter for Apple, where global iPhone revenue jumped over 23%. Market reaction and investor sentiment. Despite the week's sharp downturn, analyst sentiment remains somewhat divided. Several firms focused on the long-term picture. Goldman Sachs, for example, maintained its buy rating, pointing to favorable spending trends in the App Store. Bank of America also reiterated its buy rating, suggesting that potential earnings headwinds from rising memory chip costs should be modest for Apple. Ben Steen went a step further, raising its price target to $340, arguing that the company's AI opportunity is a bigger catalyst than any component cost issues. However, the news narrative this week was decidedly bearish, focusing on the Siri delay as a black eye for a company known for its smooth product execution. Investors are also remain concerned about the heavy capital spending across the tech sector for AI initiatives. While Apple's spending has been more measured than some of its peers, it's still caught in the broader investor unease. Technical and fundamental check-in. From a technical perspective, the stock's trend took a sharp negative turn this week. After gaining momentum after its strong earnings report in January, the shares fell back into the red for the year. Fundamentally, the narrative is a tug of war. The growth story is clear, with record iPhone sales, a services business that now accounts for over 20% of revenue, and a massive active device base of over 2.5 billion. The long-term promise of Apple Intelligence remains a key pillar for bulls. On the other hand, the risk narrative was amplified this week. The Siri delay highlights execution challenges in the AI race. The FTC inquiry adds to regulatory risks that could threaten the high-margin services segment. And finally, rising component costs for things like memory chips remain a potential pressure point for hardware margins. What to watch next week? Looking ahead, several potential catalysts are on the horizon. The first developer beta for iOS 27.4, which is expected to contain the updated Siri, is reportedly scheduled for the week of February 23rd. Its contents and performance will be closely scrutinized. Beyond that, reports suggest new M5-powered MacBook Pros could arrive as early as the week of March 2nd, and the launch of a more affordable iPhone 17e is described as imminent. For the bull case, the argument is that markets overreacted to the Siri news and that strong hardware sales will put the focus back on growth. For the bear case, the concern is that the Siri delay points to a deeper issue in Apple's AI strategy, while regulatory pressures continue to mount. The most likely scenario is continued volatility as the market weighs strong sales performance against these clear execution and regulatory risks. That's all for this week's TickerWatch. Thank you for listening. This podcast is for educational purposes only and is not financial advice. Please be sure to subscribe, leave a review, and share the episode. We'll be back next week with more on the news moving Apple.